What's up, guys? Haven't done a video in some time. I was sick. It was Thanksgiving. Not that I celebrate it, but still, it was a holiday, a stock market holiday, and the trading was very thin. So I took advantage whilst I was sick, I thought. So I didn't have to do a video then. Anyway, catching up now, and we're getting some volume back after Thanksgiving, after Monday. Tuesday was a bit of a sideways day, so obviously we were testing the highs. I wasn't expecting to test the highs again, but there you are. I covered the video at the highs and said, no, I'm still short, not short, but I'm still bearish. I'm long the market, obviously, with especially with the miners, gold and silver miners. So if the market moves down, I tend to lose money because the miners will move down, but I've very much lightened my position. I had done so already on the first test up here, and on the second test, I took advantage of a few others that sort of outperformed. I just feel like everything will come down. I'm really betting on that now. It looks a bit better with what's happened the last 2 days, trading days. We've come back down here. Now I'm looking at the SPY, the ascending line. We're right there. Now, today we have Fed speak. So obviously we have a catalyst to either break out or maybe at least test this area. I think this still stands as resistance. But to be honest, if you break out of that, you're probably going to do more than just this move up here. So might get all the way up to here, to be honest, today on a Fed day. That is a big move. I don't foresee that. What I foresee is the perfect excuse for us to drop back down to here, actually. I feel like we could break this level, especially on a Fed speak day catalyst. You can see this is building up. The chart always sort of reflects even the future. It's a way of pricing in what's happened and what's coming. And in the end, just as an event happens or is about to happen, sort of the chart sort of looks normal. It sort of looks like it kind of knew it sometimes. And in this case, I think that is the case. Let's look at the Nasdaq, which is weaker than the S&P. That's already at its ascending, broke below this area, closed at about that area. So a perfect excuse to come all the way back down to here if we have a sort of, let's call it hawkish Fed speak. So I think we can move all the way down here. Maybe not in one day, but maybe there on the first day, but yeah, basically down here. And that would make the chart look extremely weak. That's ascending, triple, touching it 3 times. Ascending support is the weakest support. And I mean, it's very weak. Look at this. The bounce we made from here to there is nothing compared to the SPY. The SPY, the bounce is pretty good, but still, it reminds me of this. But let's look at the candles here. The candles here are so much stronger. 1 or 2 red days, very strong move up, not much red. And look at this fight up this hill. It's harder. So although people are impressed, especially by the Dow Jones, the greater market for me, okay, I'm not going to say it's a bigger market than the Dow, but the more influential markets, the S&P, the Nasdaq, especially all these tech stocks that are still in bubble territory, I think this will drag the Dow, which is very strong. So, I mean, look, the S&P is okay, pretty strong, but we're basically here ready to flush, but near its high. The Nasdaq, nowhere near its high up here to test the breakdown. Pretty weak on the ascending, looks very bad. This could drag the S&P down. And if we look at the Russell, it's the same as the S&P and kind of the Nasdaq, weak and ready to come down here. So a move down to here for all these indices there and there, I think will mean, here for the S&P, I think that will mean that the Dow at least comes here, if not here, especially if the Nasdaq is ready to do a sort of triple flush, bam. And basically, because the Dow looks very strong, how is it going to come all the way down? Well, we'll start with a move down here, then there, especially today on a bearish Fed delivery. Then we have the perfect catalyst for the move down. For the move up, yeah, it's this level. I kind of already indicated it'll be up here, but I don't see it happening. I refuse to add the resistance up here because I just can't see it happening. So those are the markets. Basically, most of them weak. The Nasdaq, the S&P, the Russell ready to come down. Perfect catalyst move today. So that's what I think is going to happen. The Dow Jones will just sort of reflect what's happening in the others. I think that'll mean a move down here or here, especially here first. So that's what I expect to happen. Now, let's look at the dollar. Dollar's been holding nicely here, consolidating. Sort of 105 was support, just above 105. And I think if the markets move down, the dollar will move up. So I think we'll go here and we'll test this area. But I think we'll break through because that'll only be the start of the move down. And plus, you might as well come back and test the former support. So it could move all the way up here if the markets keep going down after. Otherwise, yeah, we could go down if the markets are going up because the Fed is sort of bearish the dollar, let's say, or they just they suggest that interest rates will not be as strong as or as for long as people think. Then the dollar will come down here. Let's see after that where support is, probably here first and there. But I don't see that happening. I see it going up. Let's look at interest rates. Let's look at the 1 year. Now this says it all basically. Now interest rates have come down quite a lot, but look at the 1 year, the short term, the nearest to the yield curve. Look at this basically a breakout. What is that telling you that they expect the Fed to say? I think you can't have the market going up and yields going up constantly. So I think Powell's going to say he's going to be aggressive, and therefore markets will go down, and therefore yields will go up. 1 year to 2 years a little behind. Let's be honest. It used to be the sort of the leading one, but I think straight away you go higher than here today, and that's it. You're guaranteed to go all the way up here. So I think it will take this out and basically find its way up around here by the end of the day to test highs. And the 1 year will just scream up. I don't know where it'll go. The 5 year will have to, make its march back here to test the sort of descending line. You know, something like this. 10 year, same thing. I've already drawn the descending line. 30 year, it'll be the same thing. You can see how much lower they've come down. So it's all about the 1, the 2, and probably the 10, actually. Let's see what happens today. Obviously, if he's if it's the opposite, then it'll come all the way back down. That'll be quite a nice move down, actually, in all of them, because they've come up quite a lot and they can find support a bit lower. So yeah, again, I'm not covering that scenario that yields come down and markets go up, because I just don't think it's going to happen. But it'll be quite exciting if it does happen, because then I have to redraw some short-term support and resistance and recalibrate maybe even the portfolio, because I've been lightening the bags for an anticipated move down so I can buy them cheaper, let's say. Okay, so that's yields, that's the dollar. I didn't go into currencies. I'll go straight to gold and silver. This is also interesting, especially today, actually. So they came back down with the market on that aggressive move down. But then, then after that, they sort of bounced decently. I've lightened my my miners already, so I'm not selling. They have to move up a lot more now. I'm talking about the GDX and the GDXJ because I'm talking about miners, but that would mean gold going here and breaking out. And I think that's what would happen on a day like today. Either we, come all the way back down, which I'm hoping, because that's what I think is going to happen. I think gold and silver and the miners will follow the markets. So if the market starts to aggressively move down, it'll just come back. It'll come back down. It'll probably outperform, but it'll come back down. But so far, pretty good. Pretty good. It looks, I don't know, I feel like yields and gold could go up. I don't know. I can see anything happening now, like a bit of decoupling, because we've been coupled quite a lot on the way down. I think that fundamentally the miners, the gold and silver, have a much better trajectory than the general markets. I understand that they move together and it's smart to trade accordingly, but I feel like overall markets tend to get things right eventually. So sectors that are undervalued will be bought, disproportionately to the way other things are bought. So I just feel like the gold and silver and the miners could have a few green days whilst the market's red. So I don't want to get rid of my bags too much. But anyway, I feel like they will come down. Having said that, if the market comes down, silver has been a little weaker than gold recently, but it's had a crazy move up. I think it's extremely strong down here because it's found extreme support and buying pressure in the $18 range. Remember last time it came back down here, it was just, I mean, whilst gold was making new lows, so really been outperforming on the way down here and on the way up a little bit earlier here. And now it's just sort of, I haven't looked at the gold silver ratio. I can just sort of feel that from watching the trading the last few days. So, but yeah, if it's bullish today for the metals, I mean, they're going to go up here quickly and probably keep going because you've got a good chart without that news. And with it, you've got a perfect catalyst to just continue the momentum. So silver, gold would just come here and probably go higher after. And then I'm going to have to really bite my teeth as I see my light minor holdings go up less than they otherwise could, at least in value. Not, I mean, percentage will be what it is, but it'll be a shame because I've cut them down to like the lightest in a while. And I realize that's quite aggressive and I'll feel like a complete moron if it keeps going up. So let's see. Let's look at gold miners. Yeah, it's the same thing. It's the same thing, really. It will just take out this quickly. And I mean, look at this candle here. It's pretty strong, compared to this red candle. It's just gapped up. So already in one day, it negated all of this negativity. It's pretty good. So it's all about today. Let's see which way it goes. I'm hoping for a move down so I can buy back what I've sold. If it goes up, I have a plan for that, but I'll have to redraw some lines. I just have to sell again and get it right for the move down and buy back on the breakout. So in the end, you still sort of make money you would otherwise have made if you just held. Okay, so let's see what happens. I have another video after the market closes.